Happy Friday, everybody. It's been quite the week. Let's take a look at everything. Risk disclaimer, we know there's risk in trading. Please always use trade capital only. You know the deal. Social media, if you're following me out there, make sure it's a real me. YouTube.com/Chris Pulver here Mondays and Fridays. Going into 2024, you'll probably see me every day if you want to. Just make sure it's me. My Discord group, I don't direct message anybody. I'll reply if you message me first, and we can start the dialogue there. But anybody that messages you claiming to be me, hey, blah 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 about your trading, your crypto, whatever, stop. It's scams. Just comes with the territory. But again, just make sure you can find me. Find me here. Live comments on my Discord channel, direct access. Right? Okay. Let's jump into the charts. Week's been crazy in a good way. Melt up, seasonality. We're at 469, just a little bit off of the highs, 474 for the week. So the volatility was pretty solid. We had a 459. I'm looking at the weekly move. We had about a $14.30 move for the week, which the average is around 10. So now you can see the average is 1150 because we finally had some volatility this week after 3 weeks of lighter movement. Uh, Congratulations to the Dow Jones for breaking the all-time highs. This is the first index to eclipse the highs. I think that the Qs and the SPYs are shortly behind it. So again, I don't know if it's going to happen in the next couple weeks, but I think if we just continue to have a seasonal melt up in this time of year, just pushing, great. Would it be, Dow hits all-time highs and then everything else corrects right now? Eh, I'm hoping that we still have a little bit more in the tank for a melt up. There's not a lot of data to disrupt it, and we'll see how the rest plays out. But we've had some good profits rolling in. I'll go to equities on demand. So protecting some profit, have a couple positions out. Expirations on the 22nd and the 29th, as well as the 5th. So taking a look here. Close out the IWM for profit this week. Close out the DIA for profit this week. Close out the SPY on 2 trades for profit this week. I do have an expiration for today. That's a 33-cent butterfly. I'll lose on that one, so I'll lose 33 cents. But net profit-wise for the week, just on what I've closed and managed so far, 2.02. I did the math wrong on this one. So this one is 2.02. This one is... Oh, I guess I did. Wow. So that was interesting. So 2.02 twice, $1.77 and $1.66. So up $7.47 a contract this week. Take away the 33 cents, still over $7 credit this week. That's pretty solid. The rest, like I said, go out to the 22nd, the 27th, and the 29th, as well as the 5th, which we have some credit spreads running out to 1/5 expiration. If I go 1/5 expiration, there's going to be a few of them in here. Let's see what else we have. Those were some. Oh yeah, we canceled those. I got filled on the Qs. That one's running. That's going to be in likely full profit. These were canceled. They didn't fill. I was trying to get filled for 25 cents for a credit spread straddle, and those got canceled. So no big deal. Let me highlight these really quickly. All right, so we canceled those, but the Qs were filled. As long as we stay above 394, that's full profit for 25 cents. A few contracts there. And added some trades in on Pfizer, Alibaba, and Baidu. Take a look at those, as well as everything else. So, like I said, congratulations to the Dow for eclipsing the highs. The Nasdaq probably not that far behind. Here's the chart alarm for all-time highs. Let's see if we can eclipse it with a little bit of momentum. If we have a stall or pullback, that's okay. If we pull back towards 400 or 395, that's okay. If we just continue to melt up higher, that's okay too. I'm positioned for both. Here is the SPY. Chart alarm going off on Costco at 650. Oh, baby. Costco is running and ripping like crazy. Wow. They just declared like a $12 dividend to shareholders in January. That's a big spike above those all-time highs. Costco, just one of those fractional shareholders, for me at least. I don't have 100 shares of it because it's super expensive. But I've been in Costco since I've been a warehouse member for the last 5 years. So getting my Kirkland's signature swag on, I guess. But it's been a good share to hold for sure, right? So you go back into the 2022 lows, you go back into the COVID crash, it's more than 100% up, and that's been pretty easy and passive investing. Let me jump into YouTube. Say good morning to everybody. Hopefully everyone got the memo that we're still live today.
One ticker.
And We got it. Morning, Chris. Good morning, Donna. Good morning, Denise. Trish. Good morning, Charles, Jacob, Andrew, David. What's happening? Jan, good morning. Nice to see everybody. Good morning and happy Friday. Indeed. Okay, so we'll be watching the indexes this morning. The dollar index on the week has been pushing lower. I still think that the dollar, with the potential stock market continuing to rally, if we're going to see the S&P and the Nasdaq hit all-time highs, I think the dollar still gets a little bit softer. 101 major support, 100 major support on the dollar index, and I think this is our range trade that we have for the next 6 to 12 months. I think the dollar, if it pushes lower, finds some support, we get a turn going into next year. The big shift this week has come with the Fed. We had CPI news where it came out 3.1 year over year. The Fed was the big change this week because now what started out as a June expected rate hike has now been switched back to March in a big way, where now it is a high probability that the market is anticipating a Fed rate cut. Now, here is an interesting point. Why would the Fed cut rates? Do they have to? I mean, are we in a recession? They don't have to cut rates. We still have inflation at 3.1%. It's not like the Fed is changing that, we're not changing inflation to say like, well, it's okay to run at 3% inflation. I mean, the Fed keeps saying 2%, 2%, 2%, sub 2%. So part of me wonders, and this is why this watch tool is important, but it's also very subject to change. This window right here to cut rates, this could still change, right? Because we could have some crazy holiday spending, we could have average earnings going up, we could have jobs to continue to print, solid gains in government sectors and services, manufacturing sector, hospitality. If we have higher wages and we have a tight labor market and we still have, maybe oil, maybe this, and I talked about this morning in this event we're doing for market traders. Oil found some really good support this week. I still would like to see possibly push just a little bit lower if it's possible. If oil can settle in, we had some pretty strong support right around that 67.50 area. If we settle in at 65, I'm looking for oil to give us something here. Right side of the trend line, oil comes back up in ranges. Look, the Fed is going to be way less excited about raising rates, or I'm sorry, cutting rates, if oil is going to spike from $65 back to $90, right? So I just don't think that the inflation game is done. I'm not saying that we're going into, oil's going to $200 a barrel and everything's going to get crazy expensive again. I mean, we have housing at an all-time low for affordability. We have interest rates that are expected to come down, but to how much, right? I just looked at the 30-year mortgages this week, Mortgage Use Daily. We're currently trading at 6.62. This is a massive drop. Literally last week, I looked at this and it was 7.11. So we've dropped about 50 basis points on the average 30-year fixed rate. And I think the market's anticipating that going into next year, this will be 6. Okay, great. So they anticipate a decent cut cycle coming from the Fed, but the Fed still needs to and probably wants to, and this is going to be Powell, it's going to have to be firm on higher for longer. So maybe offering a 25 to 50 basis points cut is okay, where it brings it down to like 4.75 to 5%. But that's with inflation at 3%. If we go, I think this is the way the Fed's going to pivot. If we go into January, February, and we don't see a continued trend lower on year-over-year CPI numbers, the Fed will quickly change the narrative all over again and be like, higher for longer. We told you that if data warrants it, we'll raise rates, or we'll keep rates the same. So I'm not completely sold that this is going to happen in March. I think the market thinks it is because this was around 40%, back between like 40, 50%. Now it's 62%. So the market's clearly pushing aggressively like it's going to get priced in. And I think that's what we're seeing. The market is pricing in a rate cut cycle. Now, what's interesting is they price in a rate cut cycle. That's where you have the saying, buy the rumor, sell the news, right? By the time we get that rate cut actually happening and actually hitting the headlines and actually hitting, the banks and how it's going to get passed down across all these industries and sectors, it's already priced in. So I could see that being the fuel that is driving these markets to all-time highs. Congratulations, 2023 has been a crap load better than 2022, right? But the reality is we're not done and it's not solved and it's not fixed and it's not permanent. So I still think that the Fed has a lot of work to do. And I do feel that they've been very lucky that we've had a pretty soft landing considering the stock market is up and essentially taking back all the losses from 2022. And you still have, people are going to work and they can get jobs if they want to. Average earnings have been higher. People are working from home, having a better work life balance. Maybe. Okay. So, and again, that's all subject to opinion. But point is, I'd say the Fed's gotten pretty lucky where they haven't broken anything. Doesn't mean that they can't, doesn't mean that they won't, doesn't mean that they aren't going to. I feel like that's kind of in the Fed's wheelhouse. Excuse me. The Fed's wheelhouse is there tends to be very reactive. When something breaks, the Fed steps in. And so what is going to break? I don't know. Right? Maybe it's the bond market. Maybe it's a melt up. Maybe they cut rates and it's premature and they raise rates again. I don't know. But I just I don't put a lot of confidence and faith that like everything's totally transparent. The Fed's got it all figured out and yippee skippy, the market's going to be super easy to trade. Was it super easy to trade this year? I mean, not really. We had AI hype led by 10 stocks. We had two broad market pushes in May and November. That was it, right? I literally, all the money that I made this year in the stock and options market for me was directionally neutral because I was cautious on both ways. I just planned on trading around a lot of volatility, which we got. Like this was a good week. I had a couple of strangles that paid out really nicely. IWM, SPY, DIA all paid out great, right? I could have been more bullish and taken way more profit on the upside by just being bullish only. But just in case the Fed did something like, slap the market around a little bit, I thought, well, maybe you have a pullback, but we didn't. It just went higher. And by the way, just real quick, you're wondering like, why do you sound so weird? My voice has been gone all week. This is the best it has been. I think I didn't have live sessions on Tuesday because I had absolutely no voice, or maybe it was Wednesday. I don't remember. Doesn't matter. I think it was Wednesday because I canceled. I was supposed to be with Nick Sayak and A1 Trading on Wednesday, but I just couldn't talk. So this is the best I sound right now. Anyway, but let's move on. So give me some questions, give me some stocks. Let's chat about everything. And yeah, I just think that going into the end of this year, the melt up continues. We have that holiday rally. The market's down a little bit on some brief pullbacks. I'm looking to see over the next week, going into the 22nd, going into the holiday trading, the 25th, 6th, 7th. I have expirations going from the 22nd, 6th, and 7th, the 29th, the 5th. I'm looking to see, do we get a nice little smooth melt up next week? Path of least resistance to the upside. The market just continues to drift, right? Maybe there's some profit taking today. Maybe we kick off with another little rally next week. We'll find out. I think things kind of quiet down a little bit, but path least resistance Santa rallies is for real. So that'd be nice. Also, I was looking at the VIX, higher time frame. Look, the VIX might settle into these lows we had back in 2016, 17. We might see a VIX at $11 or $10. If I'm there, if we get, a $10 VIX, I'm probably going to buy some shares. Not for a lot, but maybe from like a $10 to $15 spike, grab a few bucks there, just be a nice little protective hedge against just some overall volatility. It's inevitably going to come. Does the VIX spike from 10 to 50? Probably not, but the VIX can spike from 10 to 15. Big difference. Okay. Oil, gold, silver. Oil we looked at. I think that support level I'm really watching closely for a trend line break. We bounced pretty aggressively this week. This is a weekly chart. So if we're sitting here at 67.50, we bounced up this week. We still haven't broken the trend line. We take this down to a daily time frame. I'm looking to see it's possibly not done yet. Waning demand, slowdown globally. If oil settles in here, I'm going to look for some activity on the right-hand side of the trend line. The way I'll probably trade oil is going to be just trading some options around USO. Pretty simple. Gold and silver, dollar index. Dollar index pulling back a little bit, which makes some sense because we had such an aggressive push on Wednesday and Thursday that today's a little bit of a pullback. But we are making lower highs and lower lows on the dollar. I think the dollar can settle into this area before we start to pivot back up for some support. Okay. I think there's going to be a lot of ranges to trade next year. That might be easy for currency traders. That might be bad for currency traders. Depends on your strategies. I think it's pretty easy. I love ranges. I love pivots. I love efficiencies. I love pockets. So on a lot of the currencies I trade going into 2024, I'm going to be looking for a lot of ranges to trade. I think Aussie CAD is suitable. Aussie New Zealand is suitable. New Zealand CAD is suitable. I like all those currency pairs for range-bound trades. Find some pivots for me. Find some highs and lows. I can buy low, sell high. Dollar index basket-wise, if we come back into 101 or 100, I'm looking for dollar to bounce. Okay. So this is really where I'm waiting to see if the dollar gets me some trades. I'll probably be short Aussie dollar, short New Zealand dollar, short euro, short pound, dollar yen, take it or leave it. I'll be long dollar Swiss. That'll be my dollar basket play. If oil bounces hard off those levels, I'm looking for CAD strength. I'm putting together a little prediction on that right now. Let's go oil. We did right there, looking for that support trend line break. Gold and silver. Gold is trading at 2033. Let's zoom out for a second on gold, because I have this drawn as horizontal support and resistance, but just in, let me get rid of this fib for a second. There. Just in the last little bit right here, there might be something else happening on gold like this. Possibly. Possibly that. Ugh, I mean, that's like, I don't know. We could have a huge rising wedge, right? Because if we go back even further, I mean, previous resistance, and we're getting this. I mean, it is gonna be a wild ride on gold, because this could be a ridiculous top happening on gold, okay? And at the very least, we come all the way back down to range support. Now, if gold doesn't stall here at 1680, we could come all the way back down to these lows at 1200, which would be a huge disappointment for gold. Now, gold has always been seen as an inflation hedge, right? So what happens if inflation continues to go lower? If inflation's going lower, gold is likely going to weaken, which would be a crazy move, because if gold weakens, dollar gets stronger. If gold weakens, dollar gets stronger. What happens to Bitcoin? Not that they're permanently correlated, but there's certainly something to be taken out there. So I'm looking for more resistance on gold. I'm looking for more of a bearish position on gold right now, but define risk, right? I mean, don't look at gold and say like, well, it'll never go up above these highs. That's not true, because what happens is we are testing, testing. We faked out there. I mean, look, if we close back above these highs at 2070, we might be off to the races to 2050 or 2500. So I would be able to stop reverse, no problem. But right now, I'd say if we hold this level, we're coming back down to range lows. That's around 1700. So I'm looking more for a short-term top on gold, see if this rising wedge kind of plays out, and then this thing drops back down to support. So right now I'm a seller on gold, and we'll see how that plays out. But again, if we close above on a daily weekly chart above 2070, 2080, 2100, I think we can't ignore that price action is supportive of this, right? And it's a weaker dollar. It's a nice run on gold, but does the dollar have that much runway to the downside? I'm not sure. So we'll track it, we'll watch it, and we'll figure out how to trade it. Okay, silver. Silver definitely more range bound, a little bit noisier. Silver still to me is a bullish trade. This is the low, this is the high. All of this is just corrective, all of it. So we have a lot of noise going in right here. It's pretty choppy. Can silver settle back into like $18 support? Yeah, maybe. But I'm still looking for it to run back up to 30. And if we extend this move, I've already done this. I was projecting silver with a breakout to get up to like $35. And then if we pull back to that resistance becoming support, another push up towards like $45. That's longer term, right? Do we have to have a recession for that? Do we have to have a weaker dollar for that? Probably. Probably. But still, it's noisy. So I'm buying low. I like silver. I'm holding. I'm going to add more down here if we get to $18, $19. Holding right now, if we break above these highs at 26 to 30, we breach those $30 highs and looking at 35. SLV is a pretty good position for me in my portfolio, and get a nice little chunk of shares on that. Bitcoin. I just looked at this morning, so we're trading at 42,000 on Bitcoin. We could have a bit of a pullback. I looked up the mining cost. This is pretty interesting. So I zoomed in. If I go to all and I reset the zoom, this tracks the average mining cost along with the spot price of Bitcoin dollar. Now I'm just going to zoom in right here over the last. Let's go to the last little bit. Let me see if I can do this. There. So going back to, late 2022, September 2022, mining costs in the $18,000, $19,000 area, mining costs have gone higher and higher and higher. They peaked up here around 38. Currently they're sitting, mining costs are around $43,000, which is exactly where the price is right now. So a pullback to me is an opportunity to buy the dip, but like I said, if we get back to 38,000, I'm going to add more Bitcoin. We pull back to 32, 31,000, I'm definitely buying more Bitcoin. My next levels as we should be focused on 48,000, 68,000, 80,000 is double what we currently have, and then 100 plus is just a big round number for momentum. So I still like Bitcoin a lot. Um, I just think it was nice to find something like this that gives me, this is where you want to be focused on buying. Let's say this. If Bitcoin runs to 100 plus $1,000 and the mining costs are still at $43,000, guess what's likely going to happen? At some point, Bitcoin stretches out in that ridiculous run. It gets super bullish and everyone's all excited. And then just watch the mining costs because price will likely pull back to the mining costs, build another base, and then run again. So if you want to track those runs and pullbacks, just know that if you have the chance to buy at mining costs, it's a pretty good spot to buy. It's still risk capital. There's no guarantees in trading. There's no guarantees in Bitcoin. But if you want to buy at mining costs, if you've done that since $3,000 levels, $9,000 levels, $15,000 levels, $20,000 levels, it's played out pretty well. So if there's any traders out there looking for Bitcoin levels, that's a pretty good way to track it. Okay. All right. Let's go to some currencies really quickly. Aussie CAD, I like long. This is the range that I'm trading. I'm trying to get long all the way up towards 94. Swiss pairs, I'm still holding against the Swiss. We got some sideways movement, but I'm bullish on everything against the Swiss except the Swiss yen. That pair I probably won't trade. Aussie New Zealand, potentially a big wedge. I talked about it this week in the flex room. We break above, I'm looking long to 114. We break below, I'm looking short towards 102 to 101. The good thing is there's ample opportunity either way. We have this swing to the upside, we have this swing to the downside, and we're obviously getting some indecision. So I don't know what direction the Aussie New Zealand wants to go, but I'm certainly willing to follow it. So breakout, hundreds of pips, breakout, hundreds of pips. That's the trade. Aussie dollar, anything here? No, we were buying the dollar, Aussie dollar down here. We started to position for Aussie dollar here, took a nice chunk of profit. We're out of that trade for right now. CAD Swiss, man, this one would be great if oil cooperates a little bit. I think CAD Swiss has a lot of love to the upside. Would be nice to see it. It'd be nice to see it break as high at 66. Take out 66, go back to 68. Looking to stack up some orders there for my portfolio builder, get some forex trades running in. I mean, if you just want to set it, forget it. You could put a 6650, 6700 pending buys. Those would be buy stop trades, and then take profit at 68. This is still a big low, but if we break this level and go higher, I just double that move. So let's say from 65 to 68, that's 300 pips. 68 to 71, that finds my pocket that I've been waiting for. So I still like CAD Swiss long, plus there's positive swap. Yen crosses, I could care less. Traders know how I feel about the yen pairs. There's a possibility that this is the bigger, structure. We have this big left shoulder, head to neckline, right shoulder, then drop. Excellent, trade it, awesome, pay attention to it. I don't think the setup is ready. We're looking at bigger structure. We'll trade a pattern, and as long as we have defined risk on yen crosses, great. Just don't try to call tops and bottoms on the yen pairs. Euro Aussie, nothing there. Euro CAD, I'm looking for a sell trade. Euro Swiss, I'm long. Euro Pound range trade. Euro Yen, nothing. Euro New Zealand, possible range bound on Euro New Zealand. Holding this low. Looking at some resistance here. If we hold these levels, probably bouncing back up towards 81 to 8200. Euro dollar 109. I'd say it's a tough spot right now. It's kind of right in the middle of all this crap. So we have this type of structure here, this type of structure here. This looks a lot like the dollar index, right? So in a way, if the dollar gets weaker, I could see the euro dollar heading to fresh highs, but from there, probably coming right back down. So in the middle, I don't like the euro dollar, but I'll be watching this kind of broadening pattern to see if that's what it ends up doing technically. Pound Aussie pulled, what a freaking spike that was, man. We had a pending order in flex around 1.90. That got spiked and stopped all in the same freaking move. That was garbage. Plus, if you look at it, it's just noise. What a piece of crap. Anyway, I mean, it is what it is. I took a loss in that one. We closed out like 800 pips on yen crosses, and I lost 175 on the pound Aussie. But whatever. Pound CAD, I'm looking for a sell trade. We're trading at 70. Ooh, maybe I don't get the pullback that I want. All right, we might have to audible on this one for the flex room. So I might look at taking a small trade on pound CAD to the downside and then keeping that sell trade at 73. We'll talk about that next week in flex. Pound Swiss, I'm long. Pound yen, I don't care. Pound New Zealand, same thing with pound Aussie, spiking like crazy. Be careful on this one. There's still a big pocket here that could get filled. This support seems to be holding, but here's what I'm going to do. I don't want to get stuck in this noise if it's really choppy. What I'll do instead is this. If we come back in and fill this area technically right here, which you can see it's close to it, if we come back down and start to get into this area, I'm going to start looking for buy confirmation only, right? Back up to a range level. So if we hold support or these lows, let's say from 2000 back up to 2.15, who wouldn't want 1500 pips in their pocket? Nobody. Everybody wants that. So yeah, if we can buy it low, I like that trade. So pound New Zealand, I'll look to buy it low. Pound dollar, I'll stay out of it for right now. New Zealand CAD, I'm bullish on. I'm going to hold this one. New Zealand Swiss, I'm bullish on. I'm going to hold that one. New Zealand yen, we took a swing trade and took some profit. So we had our high low. We entered in on a pullback, took profit at equal lows. That was like 125 pips. And then we did like 600 and some on the dollar yen. New Zealand dollar, I'd say leave it alone for right now. Dollar CAD, oh baby. Good on the dollar CAD, finally starting to drop. Here's what I would look for on dollar CAD. Dollar CAD, if we finally have some traction on this one, bear flags all the way back down here towards 31 or 3,000, and then I'm looking to buy the living daylights out of the dollar CAD. We come down to this low, I'm buying this thing. Watch oil for the range I'm talking about, $70 to $90. Watch that range. The CAD would be a big beneficiary for Q1 if we have a big jump in oil. Dollar Swiss, looking to see if we can hold this level, give us a bullish pattern, break the trend line. So do we have something like this? We have a little bullish pattern, maybe break the trend line, get on the right hand side of it, then work our way back up. This low to high, this low to high, look for some symmetry. Maybe a 5-wave move up into this pocket. I'm still long in the dollar Swiss. And the dollar yen, we took our profit at the lows. So we started to sell over here, scalping with our master flex. We had a pullback, got paid back to the lows. I had a 149 entry all the way down. That was like 700 pips, just shy of 700 pips, and then another 125 that we collected plus New Zealand yen. So we cleared a little bit of love on the yen crosses, which is fine. Took our battles, protected profits. It might continue to unravel. I told traders this: either take the profit with me or move your stop losses to break even or better. Right? That's it. So I mean, if you want to let the profits run, move your stop losses to break even or better. If you are happy with profit and you got 700 pips of profit, it's okay to take it. All right, that's it. Okay, that gets us to a bunch of currency. Hey, check this out. We got 40 people watching live. Do me a favor, hit the thumbs up button for me. Come on, man, let's saturate this thing. I know I sound like crap, but give me some love. Okay, if you have some questions, you want me to take a look at some stuff, take a look now. Give me, we got a couple minutes before I turn over to equities on demand. Any charts, any stocks, anything you'd like me to take a look at. I had a question this morning that popped up, said, Chris, you trade penny stocks? No. I have a buddy that's traded penny stocks for 6 years. I watched the guy make $4 million and I watched him lose it. So no thanks. And also he lost a lot of it with his stocks being delisted. So no interest in penny stocks whatsoever. I stick to primarily liquid instruments, 500,000 shares or more every single day, trading the SPY, trading the DIA, trading the IWM, trading the Qs, index, and lots of options. That's what I trade. Okay, Aussie, New Zealand, Dana, we talked about that, dude. Did you just come in? Aussie, New Zealand, I like this. I think this is a good trade going into next year. I'm just waiting to see what happens. If we break above, I'm going long. We break below, I'm going short. I think each one offers up about 300 to 400 pips. So I'm just going to stay neutral on it right now. There's no real direction, but I'll wait for the breakout. Yeah, all good, man. But I had that one. That's Aussie, New Zealand. I like the trade a lot. I just want to see what direction we get. I think that's a good trade. Okay. We did all the currency pairs. Let me just do a quick check. We had a big run on Alcoa. Holy shnikes. I'm friggin' loving this. Alcoa's ripping to the upside, which I'm super happy to see. I've got some income down here when it comes to some credit spreads, some protective puts, which protective puts are going to be worthless at this point, but income, I own the shares, and Alcoa might make a rip in a big way. We come back to this like $35, $40 zone. I'm probably going to flip this thing for like 10 bucks a share. So let me check something really quickly on Alcoa. Let me check my account really quickly. Should be a nice little ripper. Yes, sir. Okay, so positions looking pretty good. Next week, I'll add to my YouTube playlist, I'll add in the Trader's Path to 100%. I'll do another video on that. So my Alcoa, was down about 4 grand. Now it's down about $1,000. So we've had a pretty big swing on the day. I own some shares of Amazon. Amazon's up a decent chunk. We're at 149. I need to make sure it stays below 150 today, or I need to take the profit on that covered call by the end of the day. If it gets above 150, I'll just roll it. I mean, I'm not going to get the stock called away. That's dumb. I'm going to roll it out. Try to roll it out maybe $5 or $10. Maybe give myself a week or two, and it's in profit, which is good. BITO, that's a ProShares ETF on Bitcoin. That's in profit. CLF is steel. That's in profit. AT&T value play at 30-year lows. That's in profit. URA, URN, those uranium plays. Those are break evens. So sitting here, let's say that Alcoa runs another 5. Well, I mean, what's the potential upside? There's a lot of upside. It's kind of ridiculous. There's a ton of upside here. Um, I mean, I think I'm going to try to hold Alcoa to like at least $40. I think $50 is possible. We have lots of gaps in pockets as well. So let me just do the math. Let's say we go up $10. So right here, if we go up $10, that would give me $10 a share at 400 shares. That's $4,000, which reduces that drawdown. So if I take down the 24 drawdown, I'd still be up almost $3,000 in profit. If it gets up to $50, well, that's $20 a share at 400. So that's $8,000 in profit minus the $1,000 drawdown. Oops, minus the $1,000 drawdown. I'm up 7 grand. So yeah, that's a pretty big chunk of profit on Alcoa if we get a rip to $40, $50. So I like it. I've been super patient on Alcoa. I had some ownership in here. I've lowered the cost basis into the low 30s. So we're back up to break even. I think in my Schwab account, same type of thing. Yeah, same situation. I have some shares and I'm upside down. It's right here. So I have the shares and I'm upside down to the 1376 drawdown. So if we go up $10 a share, that puts me at like a $2,500 profit, $2,600 profit. There's a naked put for some income that'll be mostly decayed, and I'm going to make another $100 on there. I just did that for a couple of stocks out to the end of the year, looking for some income. Amazon, just want to make sure we stay below 150 today, so I can have the covered call expire in full profit, and I'll add some more covered calls, lower my cost basis on Amazon. The big rotation that I'm noticing is your Mag 7. Excuse me, my voice is going to be just garbage this weekend. The Mag 7 is not getting the same type of love. It's more of a pause on the Mag 7 or Enormous 8, and it's all getting thrown into the Dow. If you want good quality companies over the next 6 to 12 months, focus on your top 30 in the Dow. Those are probably going to be where most of the stock market's going to go. This rotation out of NASDAQ, this rotation out of tech, the hype in AI, I think goes into quality fundamentals, cash positions, dividends. It's a way to participate in equities without having a bunch of the risk because the drawdowns in the Dow are way less than the NASDAQ. Okay, so we'll see. All right. Am I getting some spammers coming in here or just some funny names? Lifestyle Harmony. Thanks. Lori, yeah, Mag 7 Enormous 8. You haven't heard that? You've been living under a rock all year? Apple, Amazon, Google, Netflix, Microsoft, Tesla, Nvidia, right? Your large cap, mega cap tech that's pretty much led the entire broader market this year until it hasn't. So we've only had, like I said, we've had two broad market pushes this year. It was May and it was November. Everything else was essentially on the coattails of the Magnificent Seven. That's just the dumb name they've given all these giant tech stocks this year. So your household tech stocks, your Apple, Microsoft, right, Google, Meta, that's your 7 or 8. You throw in Nvidia, throw in Tesla, throw in Netflix, there's your 7 or 8. But really it was the S&P 10 this year, and it was the S&P 490 that underperformed. But DIA, like I said, congratulations to the DIA for being the first ETF to break the highs, and the Dow has eclipsed the all-time highs. So we're at all-time highs. So that was avoiding a 2-year drawdown. One last thing, I want to give a shout out to the old bond market. The bond market was very close to doing something it has never done in the history of the bond market, which is a 3-year drawdown. This ridiculous rip from these lows, with the 10-year dropping as aggressively as it did, we saw about a 17% swing. Look at this low. We've seen about a 19 to 20% swing, which essentially saved the bond market from doing something it's never done. So we had a 2-year drawdown, 3-year drawdown going all the way into literally November, and then rip to the upside. So the bond market had a big recovery. and likely will continue to gain a little bit as the rates continue to show signs of weakening. Here's the 10-year rate. Look at how aggressive this thing is dropping. From a peak of 5%, we're down over 100 basis points in the last, what, the last month, month and a half? So aggressive repricing on these rates and yields and bonds, right? It's inversely correlated. So when the yields are dropping, the bonds are rallying, which is a pleasant surprise to the bondholders in those 60/40 portfolios, right? They've been watching bonds just trash their accounts for the last 2 years, 3 years until literally the last month. So good stuff. Okay. All right. And Mikey John talking about a zigzag. Cool. Is that your favorite indicator? It repaints, by the way, if that's your favorite indicator. Look, tops and bottoms, man. You got overbought, oversold conditions. You got divergence. That's how you find tops and bottoms. But the market waves for sure. There's structure. There's Fibonacci's. There's natural behavior. But in the stock market, there tends to be some irrationality. But, we look at charts. We find our trades. That is it. All right, everybody. Well, looks like all that thumbs up stuff didn't work very well. We got 40 plus people watching. We still have 6 thumbs up unless I got to refresh my page. Oh, well. I guess I don't get the likes today. All right. Anyway, thanks for being here. I'm going to switch gears, jump into the trading room with the Equities on Demand traders. And happy Friday. Have a great weekend. We will be back next week on Monday. I've got a little trip planned. I'm going to be gone 17th, 18th, 19th. Got a little golf trip planned. I might post a video Monday morning. And that would just be, I'll post it at this time. Next week when I get back, I'll be back in the office Wednesday, Thursday, Friday. So I'll do a trader's path to 100%. We'll be watching prices. I'll be active in the Telegram chats and messages for the trading rooms that I'm running. If I post a video, like I said, probably a Monday outlook for all the trading rooms and on YouTube. I'll post that at 9:30 a.m. Monday, but I'll probably do the video on Sunday. So just look for that, but I'll be around. You know how to reach me. Here's my Discord group if anybody wants to join. Oh, we got 31? All right, cool. Thanks, Lori. I'm showing 6 on my screen, so I'm good. So thank you so much. Discord. And it's a free group chat. There we go. Perfecto. And I'll post this on Instagram as well. I'm just trying to get some more feelers out there. I saw that I could actually stream live on Instagram, but I don't think I could do it at the same time as I do YouTube and Twitch and Twitter and all that other stuff. If I can, great. I'll just try to run them all at the same time. But thanks a lot. All right. Happy Friday, everybody. I'll see you in the trading room here in just a moment for Equities on Demand, and have a great weekend. And then I'll see you next week. All right. Happy trading. Lots of profits. See you soon. Bye.